Okay, so risk management. Okay.
All right. Good evening, everyone. Welcome back to our Banking for Success series with Valley Bank, presented by Aquanet Thomas. We are very excited to have you here for this installation of our boot camp. Today, Aquanet is going to be talking through our second workshop in our Bank for Success series. So, without further ado, I will hand it over to Miss Aquanet Thomas.
Thank you, Takeda. It's a pleasure to be with you ladies here this evening. As Takeda stated, I'm Aquanet Thomas. I'm a Vice President Business Development Officer for our Community Lending Division here at Valley, where we focus on women and minority-owned businesses. But we also help other small businesses, but we assist them with access to capital and other banking services. So excited to be here with you tonight, and we're just going to be discussing risk management and for a small business. So let's begin. All right, so our objectives this evening, we're going to identify the common risks associated with a small business, identify the external and internal factors which affect risk for a small business, identify situations which may cause risk for a small business, the common warning signs of risk, and implement, monitor, and evaluate a risk management plan for a small business. So why risk management? Risk management applies to many aspects of a business. Your business is subject to internal risks, so basically weaknesses, and external risks, which are threats. Generally, you can control internal risks once you identify them. However, external risks may be out of your control. So not all risks come from negative sources. Risks may come from positive sources or opportunities. But expansion and growth are opportunities, but they're also adding risk, for an example. So the ultimate goal is to minimize the effects of risks on your business. So let's talk about some internal risks. Those include death. So it could be death of an owner or an employee. It could be illness, could be short-term, long-term, or an indefinite illness. So those instances happen all the time in business. But in that case, what do you as the business owner have in place if any of those occur? So, for example, myself was a former branch manager, so I've had to deal with these types of risks, human risks, all the way from short-term to long-term illness, to FMLA, to having to approve someone going out on disability, to death. And I didn't have an employee who passed away, but I had a spouse who passed away. So having to be there to support my employee, but however, knowing that my employee is going through what my employee is going through, from a risk factor, she may not be able to work at that present time, and that could, be a sort of form of risk in regards to the type of job that he or she may have. So we have to evaluate all those different types in those scenarios and have a plan in place. And indeed, that a human risk occurs. So what does that look like? So that's something that we have to think about. And continued in regards to human risks, theft and fraud. So there's product and inventory theft. There's timesheet fraud, accounting and cash fraud. Again, using my banking experience, I've had team members who have stolen money from that cash drawer. So it's important to have policies in place where, for example, surprise audits, even though we do surprise audits at the bank, they're pop-up, they're surprise, but some folks may still try to steal and hopefully think, they'll be able to put the cash back before they get audited again. And then with product and inventory, you see lots of that as well, where employees are stealing, and that can cost you money as the business owner. And in regards to timesheet fraud, an employee may think that's not hurting the business because they're inputting their time to benefit themselves, to get overtime, or possibly not, not just leaving early from work and saying that they stay later, but it's still taking cash away from your pocket at the bottom line. And then accounting and cash fraud, your accountant could be running your books incorrectly. They could be, if they have access to your bank accounts, they could be siphoning money from you. And the same thing applies to any of your managers or whatnot who have access to that information or access to those accounts. You have to monitor and continuously inspect what you expect. And so, even if you've known that person forever, I hear this all the time, they'll never steal from me, what have you. But times have changed. We're in a different place in time right now where we see folks have gone to desperate measures in order to support their family. But you as a business owner have your own family to support. You have other employees who are working to support their families, and you want to make sure that you are able to sustain your business. So it's a good idea just to keep tabs on that from a theft and fraud perspective. Another thing here is low morale, dissatisfaction in regards to your employees, failure to perform their scope of work, sabotage of systems, equipment, or customers. If there's some type of employee disagreement or even harassment from the customers, that could really bring low morale. And of course, there's workplace violence, also known as retaliation. So you have to be careful there as well, and take your time in assessing each situation differently, and make sure that you're always having those conversations with your employees and checking in with them, have one-on-ones with them, just to make sure that, everything is going well. And if you do have to terminate employment, right, what does that look like? Have a termination policy with your managers in regards to how you're going to terminate that employee's employment, down to, having them return their keys, changing the security, deleting them from the security panel, whatnot. Do it in, a gentle way to try to avert any type of retaliation. But if you feel that any type of, if you're angry or what have you, then do what you need to do to protect yourself and protect your business, and contact local law enforcement if that, if a situation occurs while you're terminating that employee and what have you. So next is equipment and information technology risks. So some of that may include equipment breakdown, new equipment integration, worn older equipment, and damage to vehicles. So I'm seeing a lot of this in the small business world when it comes down to our truckers and other individuals who are in the transportation industry. Their equipment is continuously, being broken down. The trucks, when they go out to the mechanics, when they're traveling around the states, they feel that those mechanics sabotage them intentionally and cause greater damage to their trucks and what have you. But this is something where you have to, in regards to, even if it's your copier or what have you, assess, right? How old is it? Does it need to be updated? Do I rent or do I lease? Those types of things you have to take account for. If there's damage to vehicles, what does your insurance policy look like? What's your policy on your vehicles? Do you let your employees drive your vehicles, whatnot? So, take those things into consideration. And some other, risk associated with equipment and information technology. So lack of backup or recovery systems, updates and repairs, power and connectivity. So physical damage and outdated systems and lack of administrative controls. We've seen increase in those cyber criminals out there, trying to gain access to our hospitals, our municipalities, and to their computer systems, right, to do bad things, to steal information. So it's always best to have measures in place, pay for that protection, to protect your data, protect your clients, protect your employees, and continuously update your systems and what have you. And if there's replace those damaged goods and have some type of control on their administrative controls, where it's you as the business owner or your manager has control of that certain program or what have you, to continue keeping your business where it needs to be from a risk perspective and safety perspective. So other internal risks may include structural repairs, so breaks in lines or utilities, routine maintenance, incidents, work-related injuries, so damage to other properties by an employee or damage to your property by others. Workman's comp comes to mind, injuries, client injuries, back again to my banking days when I was in the branches, whenever it rained, we would immediately grab from the maintenance closet the wet floor sign and put the wet floor sign out in the lobby to warn our clients, hey, floor slippery. And we did that it was twofold. One, to protect our clients from injuries, right, injuring themselves. And the second one was protecting ourselves from a possible lawsuit in case they fell or what have you. So we wanted just to, to ensure that we were protecting ourselves and plus protecting our clients. And before I go on, does anyone have any questions so far in regards to what I've covered? No? Okay. Next, we're going to talk about some cash-related internal risks. So cash flow changes. Right now, where we are in the present day and time, we've seen, we're dealing with inflation. And there has been unexpected costs that have come up with our small businesses. Some have lost their line of credits. Their line of credits may have decreased. We've seen that with some banks during COVID. They did lower some of the lines of credits for the businesses, and then the expenses to establish lines of credit. So it is very important and key to establish a rainy day fund or a standby line of credit if you're looking for that lending vehicle. So what I'm seeing now, a lot of clients, they're wanting to. Yes, so they have their cash, they want to save their cash, they want to put their cash away in some type of interest-bearing account to gain some additional revenue, but they are reapplying for those lines of credit, standby lines of credit, to utilize it in case they need to do so, for payroll or for any unexpected costs associated with their business. And especially now, we're seeing some invoices are taking a little bit longer to get, to be paid than usual. And so they need that as a cushion to help sustain their business and pay their employees. Now let's talk about some external risks. So some of those external risks include loss of clients or customers, employees, decrease in sales, fluctuating markets, increase in vendor costs, oil or gasoline increases, and fixed cost changes. So these all apply to today, what we're seeing. We're seeing attrition in the workplace. And banking, we see it a lot where we have some of our our team members are going to other banks, getting to be able to take on some new roles, the responsibilities, higher pay, what have you. Some just want to change industries. Some clients, right, they're moving out of town. Maybe, they went to a competitor. We're seeing vendors increase their prices in order to sustain themselves and make a profit. And we've all experienced with the gasoline prices, that has hit our pockets. And then rent. Rent is a big issue right now. And in addition to that, owning a home. So we've seen how inflated, these examples have gotten from COVID to now. And we're still working through them. So, and in cost of living as well. So we're starting to see individuals, who are working that 9 to 5, taking additional jobs like being an Uber driver or doing, Instacart, something just to help sustain from that inflation in regards to supporting their families or other side jobs or what have you, or digging into their 401k. So we're seeing that as well. So business environment risks, the laws, the weather, natural disasters, and your community. So, your environment is more than the space you occupy. So what happens around your business affects it. And some examples include, so you have your federal, state, county, and city laws, and the ordinance can change at any time. And then, from what we experienced with COVID, living in South Florida, right, hurricane season, we've had some wonky weather. We've had tornadoes touch down in Palm Beach Gardens. It's just been, a crazy time here for us in South Florida, but they can shut down a business for a short period of time or close it. So, what do you do then? These are all things that you have to take into account for when you're running your business. So these are something to think about in how to navigate around and make this a part of your contingency plan. And then there are personal conflict risks. You have your family obligations, you have your illnesses or deaths, natural disasters that affect your home or your family's home, community involvement, and there's complacency where, I don't know where to go from here, what have you, I don't know. So in those cases, it is good to speak to, perhaps your attorney, or if you have a business coach, your business partner, have some open lines of communication there. Or if you have a friend who's also a small business owner, have a conversation, see what they do in these certain instances and bounce, ideas off of each other or whatnot. So these are some of those personal conflicts that happens to small business owners, maybe not on a daily basis, but at some point. So one of the most important investments you can make in your business is creating a business plan, especially when identifying risks. So creating a business plan will help you assess areas of risk that could potentially impact your growth and the ability to continue your business. So the continuation of your business in the event of any risk should be noted in your plan, and look at anything that can halt, slow, or affect the profitability of your business. And you should really list them and rank them in order of importance, and look at the potential costs as well. So here you see on the slide, the written business plan, outside sources to assist in identifying risks of your vendors or suppliers. And I want to bring up something here. So last week I received a call from, so I had a individual who I received a call from, and one of her vendors, they gave her for a product that was not sufficient. It was cement. It was bad cement. And long story short, the cement shattered, what have you, and they ended up using the wrong equipment to dig up the old cement. So that caused that was a risk there to that business owner, right? So even though it wasn't her fault there, it was a third-party vendor that she used. So with that being said, she still has to make things right with that customer that was who paid her for her to do that specific work, and that was installing a patio. So now she has to deal with the customer and get what she needs done with that vendor and whatnot. So it is good to have insurance, yes, but also that's where that rainy day fund, that's where that line of credit comes in case something like that happens, where you're able to pull funds from there to fix whatever you need to complete or make even or what have you, until you're able to sort out that with that vendor and the insurance company and whatnot. And then next is the business continuity assessment. So you should always be assessing your business. You should, you could do it quarterly, what have you, depending on what type of business that you have. I know in my industry, that's something that I was responsible for when I was a manager. I was always assessing my branch and my business, making recommendations. If I saw something from a physical risk perspective, I would contact my head of security, to address it and get that fixed. So that's something you should always be looking at on a continual basis. So these are some warning signs: excessive debt in relation to your owner's equity, reliance on a small number of customers. So with that, in regards to your client base, that's why, you need to continuously look to market your business and expand your client base. If you stay with, at the small level with your clients, I have my 50 clients, my 100 clients, they won't leave me, they got me, what have you, they can leave you at any time. They could go with your competitor for a better price or a better package or what have you. What happens then? That's your cash. That's your cash flow. How are you going to replace those funds? So always continue to look and strive to market your business and increase your client base. Even if you have to, take things slowly in the beginning or what have you, just remember too that your client base may be experiencing financial hardships. They may have paid you this month, but they may not pay you next month. So are you prepared for that? So always think ahead in those realms and rely on someone product. If you're in that industry, think about expanding your product base and here resilience on one or small number of vendors. Again, keep your options open. Always look for, who or what or will be able to enhance your business, right, economically too, and whatnot. Some warning signs: cash flow problems, irregularities in accounting, bank or time records, irregularities in your computer system and administrative reports, and high employee turnover. So when it comes down to risk evaluation, identify needs for your business continuity, identify needs for potential or planned growth, discuss risk with your managers, and communicate risk to managers. So that's really important for you to communicate that with your leaders within your organization, those supervisors, in regards to potential risks, and also holding them accountable too as well. If any of like employee theft or what have you arrived maybe on their watch, or if they were responsible for doing audits or what have you. So continuously have those conversations and have something in place, and also identifying and keeping up with local market trends in your market in regards to your industry. Like, what's the newest thing? Who's your competitor? What are they doing differently? What's up and coming? So always keep an eye on that. So, everyone, wants to do what everyone else is doing because they see someone doing it. Oh, I think I could do it too. Let me do this, see how much money I can make. But when that person opens up their business, that's your competition. They can take all your clients. They're the hot new thing on the block. So how are you going to keep up with them? So just think about that. And if you need to send someone in as a spy, one of your employees, do it. Why not? Or you can go in there and shop yourself. So I know as bankers, we do that all the time. We'll go into other banks and go shopping, pretend we want to open an account or what have you, just to see what their level of service is, what kind of products they offer, or if we're looking to recruit new members to the team, we would do that as well. In regards to, a SWOT analysis, it's something that you should review at a minimum or at an annual basis or frequent, depending on your specific line of business. And I know I've said this before with a SWOT. This is something that you can change, right? This is something from your whiteboard. It changes, all the time, right? So this is something that a SWOT shouldn't be done in I would say a magic marker, right? Or a permanent marker. This is something that's going to change all the time and it's going to be updated. So always take the time to review it. So at a minimum, annually or quarterly. Some resources that can assist you with your risk assessment. You go to the SBA, SBA.gov, or the SBDC score. Your CPA, your accountant, your bank, or one of your commercial lenders. Look at your insurance provider, or if there's a site that you use on the internet or what have you that you go to. I know ADP has some resources, so any of those resources out there can assist you in, with your risk assessments. So let's talk about risk measurement. So effect on potential earnings and cash flow. So basically having the proper measures in place can assist you with these points. So again, we could help you with potential earnings and increase your cash flow, impact on your business for future growth, the costs related to risk. So if you're going to install a new security system or cameras or what have you, what costs are related to that, and then what changes would you change in your business as a result, and weigh the costs versus the benefits of the control. So those are some things to keep in mind. So the importance of risk management: you have your cash flow, stability, credit, and longevity. So minimizing and controlling the effects of risk can improve and maintain business cash flow. The continuation of cash flow creates stability for the organization and helps credit relationships remain intact while building additional credit. So what does this all mean? It means your business will continue. Longevity of your business will mean greater stability, and creditors will see the stability and the positive cash flow reflected in the financials of your company. So the rewards of risk management are all linked together, and good cash flow leads to stability, which leads to good credit, which leads to longevity. So risk management and implementation, risk control, management and implementation. Equipment and vendors. So we got to ensure your contracts, your warranties, etc., are up to date and review them periodically. You may want to make a list on a separate sheet or what have you, or store it somewhere of when your warranty expires, right? Or set a reminder. What's included in your warranty if your piece of equipment broke down. Include it in your initial business plan, readdress, monitor, and update your business plan periodically. ensure equipment and use your service plans, and know your vendors and suppliers and have backup relationships. So business continuity. This is something that my time during the branch, I had my personal branch business continuity plan. The bank has one, so a lot of corporations have this, and as small business owners, it's important to have your business continuity plan as well. What that looks like, so right here, so location to continue business operations. In case of a storm, what are you going to do if you lose power in your space? One of the banks I worked for, when a hurricane was going their way, they went to Georgia and to make sure that we were still online and the clients still had access to what they need access to in case that they lost power. So they had that in place already, and they have a specific team for when storms come or what have you, in order to go outside of the impacted area or pending impacted area to make sure that business is flowing, continuity is flowing, that our clients are going to have access to their funds or whatnot. So it's important to establish a manual system, and train your staff and your team to continue operation. Is there a calling tree? Where's your backup operating systems? List your staff duties. Do you have, their contacts? You review your contracts with your vendors for provisions, and know your system provider backups and contingency operational plans, and stay up to date with your local municipalities and whatnot, in the county in regards to if a situation may arise and what have you, and especially for your team members, hey, have a group text, whatnot, create something there, because there's times where, for me, again, I've had a tree blocking me from, or flooding, that I've not been able to get to work because of bad weather. So that's where my manager had to come in place and had a planning for, in case employees were not able to get to work. So what does that look like? So we still had to service our employees, but still take care of our employees in that sense. So what does that look like? Again, have a plan. Discuss it with your employees, discuss it with your manager, what have you, but have a plan. And a red binder. We kept ours, and I kept mine in a red binder, but something visible that your employees know, hey, this is it, in the event that you need to go to it for any reason. Then you have your information technology system. Do not share login information, protect your systems with firewalls, institute levels of access, perform other reports, use sample transactions or use trial transactions, and conduct scheduled and surprise audits. So it all depends on what type of business you have. But, some IT companies, you could probably contract with them to send emails to your team members, and they're basically like an exercise to see if they would pass in regards to like phishing. Click here, you've won this, blah, 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 click here. So, or report it as phishing. So that happens in the bank a lot. So those pop-ups on us. So if I suspect phishing, I'll click on the phishing component on my email and say, congratulations, this has been a test, A, B, C, D. Right, so you've passed, or it could be a real phishing email, and they'll say, "Thank you, we're going to analyze this." But put something in place there. Do make that investment from an IT perspective. Protect yourself, protect your information, your employee information, protect your vendors, protect your customer information. These bad guys are out there, and while you're working hard to sustain your business, they're working as hard to infiltrate your business. And with that being said, we're going back to our internal risks. You may have an employee who is looking to maybe go work for a competitor. You have your information there that's privy to you and your business, your company, right? that employee know, hey, I'm going to go. I'm going to be leaving soon. I'm going to put in my 2 weeks, but until then, I want to take this proprietary information here at ABC Company and forward it to my personal email. Those things occur. So that's why you have to have the proper measures and protections in place to block if something like that happens. Even when you're printing, right? Same thing could happen. Do you want your employee printing personal information, client data? You could put those, special parameters in place to protect your information, protect your client, and whatnot. So those are some things to consider. And when it comes down to employee management, if you're going to have employees, it is important to set proper management expectations. So, if you're going to do it yourself, great. But I would say consult with an outside agency like the SBDC or whatnot. But you have outside vendors like ADP or Paychex who are there to assist you in regards to They have tools out there, and they can, regardless of what size business you have, there's something. They have a solution to fit your specific need. So pre-employment screening and background checks, very important. Outline the job descriptions and duties. That's important as well. Communicate clearly the expectations, cross-train your staff. It's very important. I did that, again, going back to my days as a branch manager. When I came on board as a manager of this specific bank I used to work for, not everyone was cross-trained. So the first thing I did was send those individuals to training so that in case something happens, everyone in the office is cross-trained. You could be behind the teller line, or you could be at the desk assisting a customer and opening an account. No matter what has happened, or an illness or what have you, someone was there to assist. I even was cross-trained. It doesn't matter to me as a manager. I, wouldn't do anything that my team wouldn't do. So there was times where I was running a teller drawer on that teller line if one of my team members were out sick or had some type of, accident or family death or what have you. So it's always good to be cross-trained yourself and know yourself as the business owner in case you do need to go and do that. Know what your, just know what the scope of work that your team members are doing. And if you need to jump in and take the reins, to keep your business going, do that. Identify temp agencies that specialize in your field and periodic evaluations and feedback. So I would have weekly one-on-ones with my team members. Hey, how are you doing? How's it going? What have you? And then during that time, it would be our special time between the employee and myself. That's where they could, share any concerns with me or what have you. But for me as well, I can provide some coaching and some feedback, but do it in a positive manner or have you. But that special one-on-one time, even if it's for 15 minutes, it means a lot to that team member and it could go a long way. So it's a little tidbits there. I'm going to move on. So your exit strategy. So always include an exit strategy in your business plan. Revisit it periodically. So insurance payment, liquidation of assets without insurance. Is there a trustee to handle this? Family member, employees. I had a client at my former bank who had a men's clothing store right before COVID, moved into the mall, into a bigger space. COVID happened. My client had to go out of business, had to liquidate and sell the merchandise at a lower cost in order just to get it out of the store and to get recoup his investment some way, somehow. But he still had to pay the vendor, right? He still owed the vendor the money. So he had to do what he had to do. And in regards to liquidating the assets and what have you. So always include an exit strategy just in case and see, how that would look like. And that exit strategy is going to change as well as your business grows. So here we're going to have 8 key points to remember. So there are internal and external risks associated with a small business. Begin assessing the risks by completing a list of those events or resources involved with the business that could impact continued operations and cash flow. The cost to ensure or minimize risk should be weighed to the potential impact involved, and a business continuity plan should be a part of your overall business plan. Strategies to avoid risk can include communication, setting expectations, support systems, training staff, insurance assessment, and contingency planning. Be honest in reviewing your business for risk and warning signs. Seek assistance from others, and an exit strategy is important. All right, and so that is the end of our presentation. All right.
Really good on timing there.
Thank you.
Oh, you're muted, Kathy.
We'll get a copy of the actual PowerPoint, right?
Yes.
Right.
Yes.
It's great information.
Thank you.
Send that to me.
Yes, I'm going to send that to you right after.
Yes, and
We
I will
have,
get that out.
15 more minutes.
So I have a question. I know a lot of people say you have to be in business for 2 years. I don't know if that's true. You can hear me?
Yes, in what term in regards to?
In order to go to the bank and get like a loan for your business, which I don't know. I don't know how well, the first thing would be the business credit, and then the next thing would be, do you have to be in business for 2 years in order to get a loan for a business?
So I would say that all depends on the bank. So each bank has different types of programs. I know here at Valley, for us, we need 1 year of business, at least minimum. We want to see you have at least 1 year of revenues. And we evaluate your personal credit profile versus the business credit. And there's not really per se, I know a lot of people say business credit, but you as the guarantor, we're going to pull your credit and we're going to evaluate it and look at it to see if you can afford to add this new debt onto the existing debt that you have. So, but for community lending, we look at least a year. But traditionally, you're looking at 2 to 3 years because they want to evaluate your tax returns and your other financial documents to see if your business cash flow. Your business has to be making money for the banks to lend you money. Basically.
Does that hold true for a nonprofit?
Nonprofits are different. They're evaluated different.
And I will say, in my experience with a nonprofit, like we've really struggled to get like credit cards and lines of credit for the organization specifically, because it goes based on whoever's in charge is personal, and we don't always want to do that. So that's been an obstacle for us in the nonprofit sense.
And you guys are 501(c)(3)?
501(c)(3), yes.
Wow.
That's the general nonprofit organization.
Mm-hmm.
So what I mean, if you're like a starting up nonprofit and you're not doing product services, you're doing actual social services. I mean,
We have to
how
fundraise.
does that work?
Yeah, so
I was thinking.
you have to generate some type of revenue. You have to generate some type of revenue in order for the banks to, you have to pay it back, right? How are you going to pay those funds back? So you got to think of it that way.
Yeah. So I guess my question is, how would they consider income in the business? If say I quit my day job and I'm operating my business full time through sponsorships, fundraising, donations, and grant funding, but now I want to expand into something else. Say I want to expand into providing housing. How do they evaluate
that's
income
something
in the
totally,
business?
that is something totally different. So with that, you would have to go to, they're gonna want financials at least 2 years. So that's a totally different conversation when it comes to the nonprofits. Mm-hmm.
Okay, cool. Thank you so much. That's all my questions.
Mm-hmm.
I have a question. Is there like a ABC, format or something to get a loan, a business loan?
Again, it's depending on the bank, your bank, and their requirements. But the most important thing is your financials. So, and your business plan. You have your business plan completed, your tax returns, your P&L statement. Those are what's important to have prepared and have in order, prior to, right? Because you gotta, again, your business has to cash flow, and it has to make sense. They're not, the banks aren't gonna lend to you if you're in the negative.
Okay,
If you're in
so
the red.
I have zero, I'll say zero cash. I have a house. I have lots of property. Should I look to borrow money from those, use those things to get money?
So what I would say for your scenario is look at SBA,
Okay.
the SBA loan. But with the SBA loan, they're going to want to see, and it's going to take some time, but you have that lender to have a conversation with and complete the packet and everything. And then they're going to want your business plan completed, whatnot, but an SBA loan.
So during the pandemic, I pulled like a format of a business plan offline, and I started working on it. I did not get anywhere near finishing it, but is that a good idea to, just use some templates that you see? And
Yeah, you can. And then two, reach out to the SBDC in Boca. At SBDC, because those are free resources there. I'm trying to Google them.
But I think, as you trying to ask Kathy, because I'm thinking the same thing, like what does the bank itself look for in a
Money.
business plan? Besides finances, I know finances is one of them, credit is one of them, but if you need a business plan, then what are you looking for if you just want to know?
Here's the thing, your business plan, you need to create your business plan based on your business, particularly, pertaining to your business. Don't create your business plan thinking about lending from that space. You create your business plan, it's tailored to your specific business. So, and everyone's going to be different. Your scenario, you're a 501c3. So nonprofit lending is very different from, let's say, your traditional business banking, commercial banking. The bank that you currently have your checking account with, have you spoken to them? Your business account, your nonprofit account, have you spoken to them? So
No.
that's where you need to start. So that's where we talk about building relationships with your banks.
Because I have credit unions, so a lot of people say credit unions aren't the best when you have a business.
So what I say to that is, don't listen to what other people say. Do what you need. Do what you think is, right for your business, and you could go and go into your local bank, ask that banker some questions. Go to the credit union and see what their programs are. Some banks may not lend to nonprofits. Some credit unions may not lend to nonprofits. But the thing about it is, you need to ask questions and seek to understand what the process is. Every bank is different in terms of their lending programs and their processes and what have you. But one thing remains the same. You need to have your documents and your financial documents in order. You need to have your tax returns. You need to have your business plan. All those things need to be completed. Your profit and loss statement. That's universal across the board that you need to have in order. And if you don't, if you're a nonprofit, there's resources out there, for folks who can assist you with getting those things in order. If not, contact your CPA. You know,
So basically, in terms of getting like loans, you're saying, shop around, go to different banks because
yeah,
different banks will say different
yes,
things.
exactly, yes.
There's
And
no like set, like if one
No.
says no, everyone says no.
correct. There's no set. And yep, they have different appetites, right? And now they have this risk appetites. At the end of the day, the banks want to get repaid. If they lend money, they expect to be repaid. And look where we're at now with our economy, with inflation, right? There's buildings out there that are sitting empty with no tenants, but there's a mortgage out there from a bank. That bank is expecting to be paid. That, the individual who got that, mortgage on that building may not have the money to pay for, the bank back. So, but you go shop around.
And Kathy, I dropped the links for the SBDC. It's the small business in the chat. The first one's to their main website. The second one is actually a form. If you fill that out, they will reach out to you and pair you with a coach who will figure out what your needs are, and then will actually help you with them.
Yeah, and it's free.
Partner with them quite
a bit. Unbelievable. It's free. And they help with marketing and everything like that. And if you ever need to pick, I'm going to throw out my SBA lender out there. If you, ever need to pick his brain, I could find some, get you in contact with him so you could pick his brain.
Okay.
That's what we're here to do. We're here to educate and offer resources. It's not all about the sale. So it's just about educating our community and our small business owners for our success. And that's something that SBDC too, they work with. They'll get your financials and they'll prepare you and get you ready. And they work with some banks. So they may say, hey, Aquanet, I got this person, their financials are ready. What do you think? I've had those calls before, and then they say, hey, yeah, okay, let's have a conversation. And I had someone from the SBDC, and lo and behold, I knew that person personally because they don't share the name. You see what I'm saying? So they get you ready.
I'm still in the back of the napkin stage.
Okay. Okay.
So I have a long way to go.
That's okay, but at least you're finding out. You're exploring, and you're getting that's okay. You're getting your steps in order.
And know that signing up for consulting with the SBDC, it's fine that you're still back of the napkin. They will work with you wherever you are at the pace that you want to move at.
Yeah.
So any suggestions on what to look for when bank shopping?
Well, I would say it all depends on you. I can't, you as an individual, what you're looking for, what you expect from your bank.
And
I'm saying,
when
like,
you
for
say
a
bank
business.
shopping, do you mean specifically accessing funding or a banker that's going to work?
Like deciding what bank to use. Like I'm in the phase right now of trying to determine what would be the best bank or what should I be looking for. I've been trying to do Google searches and I'm not coming up with anything to suggest like for your business, because my business is not a product. If I had a product, I've had product businesses that I didn't even need a loan. I just made money, no advertisement, just word them out, made money. But now I'm doing something totally different where I'm trying to help families to navigate the child welfare system. And a lot of those individuals don't have the money to pay. So now I have to get creative with things and I have to open up a bank account. But then is it feasible to open up a bank account if I ain't bringing in any money? That's the next thing, because from the banks that I've been looking at locally, that are community banks that give back to the community, they all have monthly fees. So if I'm not bringing any money, would it be feasible to even open up a business bank account? Because business accounts come with fees and money and charges all across the board, regardless if you're making money or not. So it's just right now, it's like, well, how do I determine, should I go and get a business bank account now, or just wait till I'm actually bringing in revenue, or wait till I'm getting a grant or something?
Have you spoken with Children's Services Council?
No.
They might help you with some grant funding. I have a lengthy background in child welfare, so they do give some grants, but a lot of times it's for specific stuff. Like at one point, they were giving grants to zip codes where there was a high rate of teenage pregnancy. I don't know if you've heard of Pathway to Prosperity, but
Yeah.
that's a program out of my church down in Boynton. And I think they have one like maybe Riviera Beach area and in the Glades. But I would go online and look at them and see what kind of, grants they're doing now, especially
Yeah.
if you know how to write grants.
So I should just wait till I get the funds to get the bank account? And then what do I look for in a bank account? Because most of the banks I've researched, there's a monthly fee. So like, how do you determine, or is there even in a bank out there, or some, maybe I'm not looking in the right place, whereas based on like, if you're a nonprofit, you have like some type of, I won't say deal or discount for lack of a better word, but like they give some kind of leniency, you know?
Well,
You have to pay a fee to have a bank account?
a nonprofit, that's so I didn't come on here to self-source, right? Or to self-promote. However, we do not charge for our nonprofit clients at
I'm
Valley.
pretty
There
sure
you
my
go, Valley
nonprofit
Bank.
account is free as well.
Yeah, there's it's
I mean, you sold it to me, so
I did. Nonprofit, you should get in charge for fees for nonprofit accounts. But at Valley, we do not, our nonprofit checking accounts are free.
Oh, okay.
I
Well, you
don't
just solved
pay
my
a
problem.
fee at all either.
And even and then, we, and for our small businesses too. So in community lending, our small business accounts are free for our community lending clients here at Valley. So
Good, you just helped me solve a problem, because that's the reason why I haven't gone on some grants, because they wanted to have a bank account. I'm like, sheesh, now I gotta go figure out a bank account.
yes, you have to, that's where you have to set yourself up for success. So
Yeah, so
yes.
I'm getting there. I'm past the napkin finally stage. Finally. Now it's just, there's a lot of decisions in making a business. This type of business is harder than just going out in the street corner and yelling, "Hey, I got this for sale,"
Yes,
Everything
it
has to
is.
be documented on paper, especially since the fact I've experienced being sued. So I want to do it as right so I can be protected.
Oh, wow. Yeah. Yeah. Yeah.
So if I have some money right now, just like money that I can reach and grab,
Yeah.
should I go ahead and move that money to a potential, because I know for a fact that if I'm starting a business, the place where I have my money, they don't do that. That's not, going to be somewhere that I'm going to look. So should I go ahead and move that savings to a potential business lender now?
So to the bank where you want to do lending, or is that what you're saying? Like to,
I'm saying, let's just say I want to get a business loan through Valley,
okay.
but my savings account is elsewhere.
Okay.
If you were me, just
Yeah.
Joe Blow, would you move the money, say to Valley or somewhere like that, Seacoast, whatever, knowing that down the line, you're probably going to be shopping with this bank for a business?
So I have clients that do that. So they want to start a relationship with us. So they'll start an account, and then in 2 or 3 months down the road, then they're like, okay, I'm ready. Let's do this loan, right?
Okay.
So for in community lending, if you're gonna, apply for a loan with me, we do require you to open up a checking account, a business checking account, because we're a relationship bank. We want your relationship and to be there with you and grow with you. So a bank account is required, but clients who know that they want to lend or to apply for a loan down the road or what have you, yeah, absolutely. Start that relationship by opening that account. And if you have funds there that you're not utilizing, that you've been saving for your business, put it in a short-term CD, make some money. Well, don't let it sit there in a checking account or a low interest saving.
Mhm.
So shop around, open this. There's some banks have some great 6-month CDs out there. I'm not self-promoting. Sorry.
Self-promote, please.
you're here. You have the
So right
resources.
right now, as of today, I have to put a disclaimer out there. We have a 6-month CD at 4.75, and that's for personal or business. And we have a 12-month CD at 5%, and that's for personal or business too. And the minimum is $500 to deposit in there. So yeah, so so we have some clients, personal and business clients. If the money's sitting there, not earning interest, not doing anything, make money off of the money that you have.
But you would require me to also have a checking account with you.
We would like for you to have a checking account, but a checking account is not required. But we would love for you to have a checking account with us. But a checking account is not required for that CD, but we would like you to.
I don't know why. That's where I'm spending money from.
Yeah.
Okay, this is good. Yeah.
Thank you for that. Thank you for that. 'Cause most people are like, I can't answer your question type of thing. So thank you for at least alleviating some stress.
Oh, you're welcome. And that's what I'm here for. I've been doing this forever. So, and
where exactly are you located?
so I work out of our corporate headquarters, Palm Beach Lakes. So you can come meet me at Palm Beach Lakes, or we could schedule an appointment at any one of the branches. I cover Palm Beach, Broward, and Miami. So I would come to your office. Last week I was in a hospital lobby with one of my doctors. Hey, I signed docs in the parking lot of Starbucks. You know what I'm saying? Like
Your mobile valley. The mobile valley.
That's it. Try to make it convenient.
I may have asked you, you guys used to be something else.
The First United, way back when. Here, that's an Enterprise Bank. That's how Valley came to Florida.
You were never Sabadell?
No, that's actually was oh my gosh, Sabadell. Wait a minute, because Iberia had purchased Sabadell, and now oh gosh, First Tennessee. Oh, the other bank came and took over.
Yeah, that's where my office is. That's where we bank. We started out with Sabadell because we had a relationship with a guy that was there for 1,000 years.
Yeah.
I can't even think of his name now. But anyway, so the bar has continued to be there.
Yeah. And that's what happens, So we have some, that's what happens too. Yeah. And then,
I'd be able to talk to somebody and doing something different. I'll ask.
Hey,
I'll ask. They certainly have lots of money. So.
Yeah, we have some it's a valley. We're good, we're over 100 years old, and we have some really good relationships out there with some of our, big, and two in our nonprofit sector too. So
we are a 501, is it 6C?
C6.
Yeah. We can make a profit.
Yeah. And we're available, we're not pushy. We're there to have conversations, hey, we're a fit, right? You're a fit, so yeah. But I'm available anytime you all come, email me, call me, schedule up a Zoom, have a meeting, whatnot. So I'm here.
Well, I've been meaning to do that, but I was waiting for this session.
Well, we do
and I'm a banker. I'm a straight shooter, right? And I tell it respectfully. You may not like to hear it, but I'm doing my job, right? So I'm saying, if that doesn't make sense, Shakima, are you sure about that? That's the type of banker I am.
That's what I need, honesty, and just give me some kind of feedback and not leave me hanging. That's what I need. Because this decision of being in a business where it's on a lot of uncertainties is already stressful as it is. So I don't need somebody just kind of bringing around the rosy when I'm trying to make a decision here, So I appreciate you at least speaking and keeping it, at whatever level you have to be professional, but still at least giving feedback.
Yes. Thank you. You're welcome. You're welcome. And then get a buddy or mentor in that sector who can, Taquita, I know Taquita's busy, right? Takina. But a mentor, someone who's, get a mentor. A mentor always helps in that, specific industry, right? That can assist you too outside. Add that mentor to your dream team, your banker, your lawyer, CPA, add that mentor.
And the
that-
SBDC does have folks that can help you with the nonprofit side as well.
Yeah.
So know that that's
Yeah.
still a resource.
Yeah, and take advantage. It's free. It's free. I couldn't believe all the resources they have. Oh my gosh.
I do think part of it's, taxes.
But taxes, yeah, right?
Reach out to Children's Services Council for sure.
Yes.
Because they get a portion of our tax base for the purpose of nonprofits dealing with children.
Okay, real quick, let me wrap this up and we can keep chatting. But thank you so much for joining for our Bank for Success session. This was part 2. We have one final workshop coming up. That's going to be on Tuesday, September 26th. And you may have noticed we got a little flip-flop. So this month we talked about risk management. So next month we'll be mastering the numbers.